If the idea of applying for a mortgage makes you feel like you're walking into a mystery exam that you haven't studied for, this video is for you. Now, a lot of people imagine the mortgage approval process like it's this big, scary black box, and you hand over your entire life, probably your firstborn child, somebody in the back office is judging you, and you just wait to hear approved or denied. No explanations, no real understanding, just anxiety. And here's the truth, lenders are not reading your soul. All they're really doing is reading patterns and looking for risk. And in this video, we're gonna pull back the curtain and walk through what lenders actually look for when you apply for a mortgage. So you're gonna learn things like the main categories every lender cares about. How do they really feel about income, credit, debt, and savings? What you can start doing now to look stronger on paper even before you apply. And if you've ever thought, I have no idea what they're looking for, and I'm so scared to even start, just stay with me. This is going to feel a lot less mysterious in a few minutes. So first of all, let us start with the big picture. So when a lender looks at you, they're really asking 3 questions. Number 1, can you pay this back? Number 2, will you pay this back? And number 3, if something goes wrong, is there enough security here for you to be able to pay? That's it. Every document, every number, every rule connects back with those 3 questions. That's why I said before, this is about risk. To answer them, they're going to focus on 4 main areas. And those 4 main areas are income, debt, credit history, and cash and assets. So we're going to walk through each one and kind of simplify it in plain language. So the very first thing we're going to talk about is income. And so your lender isn't just asking like, how much do you make? What they're really asking is your income stable, documentable, and likely to actually continue? And if you're a W-2 employee, that usually will look like looking at what your pay stubs look like, your W-2s, possibly your tax returns, actual employment verification. So they're going to actually make sure that you do in fact work there. Now, if you're self-employed, it's a little bit more like tax returns for the last 2 years, profit and loss statements, business bank statements, things like this. These are some things that they're going to take a look at. And they're not trying to be nosy for fun. Actually, that's one of my favorite things ever is I think clients or customers sometimes believe that I'm at home in my spare time looking at their bank statement, secretly judging them. It is simply not true. We are not trying to be nosy for fun. We are trying to understand if we give you this loan, is there enough steady income to support the payment over time? Can you actually pay it back? And here's something really important. Having a big income is not the only way to look strong. What matters just as much is the consistency over time. Clear documentation, not hiding or overcomplicating things. The next up is going to be debt. And this is where the famous debt to income ratio lives. And if you've never heard that before, it is a very common term in our space. Debt to income ratio, otherwise known as DTI, if you make it an acronym. It is simply how much of your monthly income is already spoken for by current existing debt payments, okay? This is going to include things like credit card payments, your minimum payments, car loans, student loans, personal loans, and any other loan that may show up on your actual credit report.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4-693-733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
What the lender is really asking here is, after all of this, is there still enough room for a mortgage payment without putting this person under extreme pressure? Again, pointing back to that risk factor. This is why paying down certain debts before you apply can make such a big difference. You're not just lowering balances, you are actually changing your monthly picture. And then, of course, next up we have credit history. This one is something that people obviously talk about a lot, what your credit score looks like, and people obsess over credit scores. And yes, don't misunderstand me, the numbers do matter. But lenders don't just look at the score, they look at the story behind the score. And they're asking, does this person have a pattern of paying back what they owe? They're looking at, do you pay on time? How often have you been late? How much of your available credit are you actually using? Are there collections or serious negative marks on your credit? You don't need a perfect score to buy. What they love to see is a pattern of on-time payments, responsible use of credit over time, and any old mistakes being resolved and not ignored. Now, finally, last but not least, is cash and assets. And here they're asking, do you have enough money for your down payment, your closing cost? Do you have a reasonable cushion after you close? Or are you literally pinching your pennies together to just make this deal fly? They want to know things like, where will the money come from? Is it in your accounts already? Is it a gift given by somebody else? Has it been sitting there, or did you just deposit it yesterday? You don't need to be wealthy, but showing that you have some reserves and a clear plan for upfront costs make you look much stronger. So to recap here for a second, income is equaling, can you actually support the payment? And debt is equaling, if your monthly load already too heavy. And credit is equaling, do you pay people back? And cash is equaling, can you get into the home and have something left over? And that, in fact, is the core. So now let's talk about some things that people think lenders care about that usually matters a lot less than they actually think. So, myth number 1, they'll judge me for my past mistakes forever. That is entirely false. The reality is lenders are often more interested in your recent patterns, so what's happened in the last 12, 24, 36 months, than something that happened years and years ago. A late payment or a rough patch from a while back doesn't automatically disqualify you, especially if you've been consistent since then. You've taken care of any collections that may have popped up. You can explain any major issues, like medical situations or one-time life events. What I always tell people here is, we are painting a picture, and we want to paint a clear picture of all of the situation. The underwriter can understand if they have a clear understanding of what is actually happening. So that is the really important aspect here. Myth number 2 is, if I don't have 20% down, they're going to laugh at me or not give me the loan. And that is also entirely false. The reality is there are many, many loan programs that do not require 20% down. And yes, more down payment can help with things like lower payments, little or no private mortgage insurance, more equity. But the lender's main focus is Is this loan structured in a way that is suitable and safe? Remember that risk factor. They want to make sure that they're going to get paid back. You won't be the first person they've ever seen with less than 20% down, or the last. So please don't worry about that. Now, myth number 3, I need to be perfect before I talk to anybody. This one always makes me laugh too, because how in the world are you going to make sure that you have the perfect situation if you've never talked to anybody? So the reality here is that mortgages are rarely built on perfection. They are built on information. And so the earlier that you're going to talk to an expert, the earlier they can get you a realistic read on where you actually stand, a list of things you might potentially need to fix, a timeline that makes sense for you and what is going to fit you best. Waiting to be perfect keeps people stuck years longer than necessary. And so I absolutely recommend that you talk to an expert as soon as you're able. Now, let's go a level deeper into how lenders think using a simple lens. So they care about patterns and proof. Again, that whole risk situation. So patterns is how you typically handle money and responsibilities. And proof is just the documents that back that. And you may think, I know I'm responsible. I know I'll always figure it out. And unfortunately, the lender is not just going to take your word for it, because a lender can only know what they can actually see on paper and what you can prove. So their world is pay stubs, tax returns, credit report, bank statements, verifying income, etc. One of the best things you can do to prepare is make your financial life easy for them to read. And so what that's going to look like is not constantly moving money between 10 different accounts for absolutely no reason. Keeping personal and business finances separated if you are self-employed. That is the ideal scenario. Avoiding sudden and unexplained large deposits right before you apply. Because guess what? They're going to want to know where the heck that money came from. Staying current on all your payments as much as possible in the months leading up to applying, because they're going to want to understand why in the world are those payments late. Because essentially you're telling a story through those documents. Those documents are painting your picture. It is your financial resume of sorts. And what it is saying is, I'm steady, I'm reliable, I'm organized, and I can handle this. Now, let's switch modes for a minute into what I can do now. Here are a few practical steps you can take, even if you're not applying tomorrow. So, step 1, do your own mini lender review. Now, imagine you're a lender and look at yourself through those 4 categories: income, debt, credit, and cash. Now, ask yourself, what would I be excited about if I were lending to me? And what would concern me? And what would I want more clarity on? Now, this exercise isn't about beating yourself up. It's about seeing yourself from their angle so you can take targeted action. Step 2, you're going to choose an easy win in each category. So for income, maybe your win is organizing your pay stubs and your tax returns, knowing exactly where they are. Or if you're self-employed, maybe getting your bookkeeping up to date. So just making sure that you have it all right there at your fingertips. With debt, maybe your win is choosing one small annoying balance to pay down over the next few months. Or setting everything to at least minimum auto pay so you never accidentally miss a due date. On credit, maybe your win is checking your reports for errors. You are allowed one free report with no scores every single calendar year. Or maybe it's bringing down one card's utilization so it's not maxed out. Under the cash category, maybe your win is opening a dedicated home fund account and sending a small automatic amount every single month into that account. Small wins add up. They don't just change your profile, they change your confidence. And step 3, make a list of questions you want answered before you apply. Instead of Googling in circles, get specific. Questions like, based on my situation, what loan types might make sense? Or what debt would have the biggest impact if I paid it down? How much of my savings should I realistically plan to use for a purchase? What's a healthy debt to income range for my goals? When you do talk to a professional, you're not coming in powerless. You're coming in prepared. Now, step 4, you are going to need to separate your self-worth from your approval. This one is emotional, but it is really incredibly important. If a lender says, not yet, or not now, or we need to fix a few things, this is not a verdict on who you are as a person or even your exact financial situation. It's information. It's a snapshot. It is a starting point. You can improve your numbers, clean up your profile, reapply later. But if you make approval or denial mean I'm good or I'm bad, I'm successful or I'm a failure, it becomes much harder to engage with the process calmly and clearly because you are not your credit score and you are not your debt to income ratio. You are a person using this system as a tool. That is literally all a mortgage is a tool. Now, let's zoom out for a minute. Inside the mortgage approval process, there are rules and formulas, yes, but then there are also humans. People who have seen messy financial paths turn into stable homeownership. Imperfect profiles get approved with the right structure and plan. First-time buyers who thought they weren't ready find out that they actually are closer than they ever imagined. The more you're going to understand what lenders actually look at, the less you have to make up scary stories in your head. Because let's be real, our brains are very overactive. You don't have to guess, and you don't have to assume that you've already failed. You can get clear, prepared, step into the process with your eyes wide open. So here's what I want you to sit with. If a lender could only know 3 things about you to decide on your mortgage today, what would you want those 3 things to be? Your answer to that question will tell you a lot about where to focus your effort in the months ahead. And now, I want to hear from you. When you think about the mortgage approval process, what part feels the most confusing or intimidating right now? Is it income, debt, credit, or the documents? Drop a comment like this. The part that feels most confusing for me is X. No details, no numbers needed, just a word or a sentence. I'll be reading through and I'll use what you share to create future videos that break down those specific pieces even more. So this process starts to feel less like a black box and more like a clear path that you can easily walk down.